What happens when a cryptocurrency keeps showing weakness and sell signals, yet some investors still argue that it could be seriously undervalued? Is DEX a hidden opportunity at depressed levels, or are traders simply trying to find value in a falling market? Today, we are taking a closer look at DEX, ticker DEXE, currently ranked around number 130, and the debate surrounding its price, momentum, and future potential. DEX is a decentralized governance ecosystem focused on decentralized autonomous organizations, or DAOs. The project is designed to provide tools and infrastructure for creating, managing, and governing decentralized organizations. That makes DEX more than just another speculative token. Its long-term story is connected to decentralized governance, community-driven organizations, and the broader development of Web3 infrastructure. But here's where things get interesting. A strong project narrative doesn't automatically mean a strong token price. Crypto markets can punish even fundamentally interesting projects when momentum disappears, liquidity weakens, or investors rotate toward other opportunities. And that brings us to the current question surrounding DEXE. Is this weakness creating an opportunity, or is it warning us to stay away? Before we get into the numbers and scenarios, make sure you like this video, subscribe to the channel, and most importantly, leave a comment. Tell me honestly, do you think DEXE is undervalued right now? Or do you think the downtrend still has more room to continue? Looking at the technical picture, the first thing traders need to recognize is the broader trend. When a cryptocurrency starts making lower highs and lower lows, the market is telling us that sellers currently have more control than buyers. That doesn't necessarily mean the asset will continue falling forever, but it does mean that calling a bottom too early can be extremely dangerous. For DEXE, the short-term setup remains something traders need to approach carefully. Weak momentum can create a cycle where every attempted recovery runs into selling pressure. Buyers step in, the price bounces, previous holders use that bounce to exit, and the market loses momentum again. That is exactly why support and resistance matter. The first important level to watch is the most recent area where buyers successfully stopped the decline. If DEXE can hold that zone and begin producing higher lows, it could be an early indication that sellers are losing control. But simply touching support isn't enough. A real reversal normally requires confirmation. Traders want to see stronger buying volume, improving momentum, and eventually a break above a meaningful resistance level. On the other side, if DEXE breaks below established support with increasing selling pressure, that would weaken the bullish argument considerably. A failed support level can quickly become the next resistance level, creating even more difficulty for buyers trying to recover. Momentum is another major piece of this puzzle. When momentum indicators remain weak, short-term traders generally have less reason to aggressively chase a falling asset. And this is where DEXE becomes particularly interesting. The token may look cheaper compared with previous prices, but cheaper does not automatically mean cheap. There is a huge difference. A token can fall 50% and still fall another 50%. That's one of the biggest mistakes retail traders make in crypto. They see a large decline and immediately assume the downside is finished. But markets don't care about the price where someone bought. They care about supply, demand, liquidity, sentiment, and future expectations. So what are the signals telling us? The overall short-term picture can be described as cautious to bearish, while the trend remains weak. Negative momentum and sell-side pressure can keep traders defensive until the chart proves otherwise. That doesn't mean DEXE is doomed. It means the burden of proof is currently on the bulls. Bulls need to demonstrate that buyers are returning. They need to defend important support, build a higher low, and eventually reclaim resistance with convincing volume. Until that happens, every rally should be treated carefully because it could simply be another temporary recovery inside a larger downtrend. Now let's get into the big debate: undervalued or value trap. The undervalued argument is actually easy to understand. Supporters could point toward DEX's utility, its focus on decentralized governance, and the broader potential of DAO infrastructure. If the ecosystem continues developing and decentralized organizations become more important across Web3, then a project with established infrastructure in this area could potentially attract renewed attention. And if market sentiment eventually turns bullish across the broader crypto market, smaller and mid-cap projects can sometimes experience powerful recoveries. That's the bull argument. But there is another side. A value trap occurs when an asset appears cheap because its price has already fallen significantly, while the underlying demand continues deteriorating. The danger is assuming that yesterday's valuation represents tomorrow's value. Crypto changes extremely quickly. New narratives appear. Capital moves from one ecosystem to another. Investors rotate between sectors. Projects that looked important during one market cycle can lose attention during the next. So even if DEXE has real technology and a legitimate use case, the token still needs sustained demand. That is the critical distinction. A good project isn't automatically a good short-term trade, and a falling token isn't automatically an undervalued investment. Now let's talk about the risks. The first major risk is continued downside volatility. If the broader crypto market becomes risk off, DEXE could face additional selling pressure regardless of its individual fundamentals. The second risk is liquidity. Smaller cryptocurrencies can move much more aggressively than large cap assets. A relatively modest amount of selling can sometimes produce a surprisingly large price movement. The third risk is competition. DeFi and DAO infrastructure is an extremely competitive area. DEXE doesn't operate in isolation. Investors have countless alternative tokens and ecosystems competing for their capital and attention. Another risk is narrative fatigue. A project can have a strong story, but if the market stops caring about that story, price performance can suffer. And this is where retail traders often get trapped. They see a token that is down dramatically from its previous high and think this has to bounce. But the market doesn't work that way. Sometimes the strongest looking bargain is actually a warning sign. Now let's consider both sides of the future. In the bullish scenario, DEXE stabilizes at an important support area, selling pressure decreases, momentum starts improving, and buyers begin building higher lows. A successful breakout through resistance could then change the short-term structure from bearish to neutral and potentially eventually bullish. If that happens while the broader crypto market is also recovering, DEX could receive additional speculative interest. And because crypto markets can move rapidly once sentiment changes, a token that has been heavily sold can sometimes recover surprisingly quickly. But the bear case is equally important. If DEXE continues producing lower highs, loses major support, and fails to attract meaningful buying volume, the market could simply continue repricing the token lower. In that scenario, every bounce could become an opportunity for existing holders to sell rather than a genuine trend reversal. The worst case setup would be a combination of weak technical momentum, declining liquidity, negative market sentiment, and reduced attention toward the DEX ecosystem. That combination can create a difficult environment for any mid-cap cryptocurrency. So where does that leave us? In the short term, DEXE is a coin that requires confirmation rather than blind optimism. If you're watching the chart, pay attention to whether the token can defend support and start creating higher lows. Then watch resistance. A convincing break above resistance accompanied by improving volume would be much more meaningful than a random one-day price spike. For the longer term, the story becomes more complicated. Long-term investors need to look beyond the chart and ask whether DEX can continue building useful infrastructure, attract developers and users, maintain relevance in the DAO and governance sector, and generate sustained demand for the DEXE ecosystem. If those fundamentals strengthen while the market remains supportive, today's weakness could eventually look very different in hindsight. But if adoption fails to keep pace with expectations, the undervalued argument could become harder to defend. And that's the real debate with DEXE. Are we looking at a quality project temporarily suffering from a weak market cycle, or are traders confusing a lower price with a better value? Right now, the chart doesn't give us a simple answer. The bears have the advantage as long as the downtrend remains intact, while the bulls have a potential opportunity if they can prove that accumulation is taking place and resistance can finally be reclaimed. So I want to know what you think. Is DEXE one of those cryptocurrencies that the market is currently overlooking? Or is the falling trend telling us something investors shouldn't ignore? Could DEXE surprise everyone with a major recovery? Or is another leg lower waiting around the corner? That's the question that could make the next major move in DEXE very interesting. And remember, this video is for educational and informational purposes only. It is not financial advice. Always do your own research, understand your own risk tolerance, and never invest money you cannot afford to lose.